August 26th, 2024. So today we had a parabolic wedge on the open and mostly went sideways the rest of the day. You can see the wedge. We had one pullback, two pullback, three, and we pretty much ended up closing the day right around where the bottom of the wedge was. So you can make an argument we went sideways the rest of the day. Another, magnet you could look at. We had this rally, spike, pullback, channel, and the midpoint of that. Actually, let me just clear the rest of the drawing set real quick. And the midpoint of that would be about right here. And that's around where we oscillated around for the remainder of the day. So reasonable to consider it, basically the bottom of the wedge was the magnet, or you could say the 50% pullback, that was the magnet, whichever one you want. Today, we ended up getting a failed breakout above the prior day's high and a reversal down. You can see we had an inside bar last Thursday for bar two, and it was not the high of the day. And we had an inside bar on Friday for bar two. It was not the low of the day. And today we had an inside bar on bar two as well. And it did end up being the high of the day. Obviously, it's really hard to capitalize on, selling below bar two. The whole sell-off was pretty difficult. The only reasonable entry I thought of was really bar eight. And even that was probably not great. You can definitely do it and you can sell it, take a chance. But even that wasn't as good as it could have been. But I thought it was still a reasonable thing to do. So you can see on bar one, we have a bull bar and a tail on the top and a tail on the bottom. The bulls, well, everyone sees the breakout above the bull channel. So we're getting a breakout above the channel. And the bulls are hoping that we're not only going to break strongly above the channel, but we're going to break out strongly above yesterday's high and race up to the magnet, or the target, I suppose, which would be somewhere up here, which would be the all-time high. What are the odds that we just break strongly above here and start a bull trend day? Well, they're not very high. Any given day, there's a 20% chance of a trend day, trend from the open. So by the close of bar one, there's a 20% chance you've seen the high or the low of the day. By the close of bar one, we actually had seen the high or low of the day. We had seen the high of the day. However, you're more inclined to think when bar one closes that the low of the day is more likely that we've seen than the high of the day. However, on the close of bar one, this was part of that 20%, where bar one was the high or the low of the day. It just wasn't in the way you were expecting. So if you were a bull and you bought, let's say you bought the open and you were hoping to get a big bull trend day. So bar one, what you wanted to see, it's a reasonably good looking bar, but the tail on the top is a big problem. If this is the start of a strong bull trend, you want it to be stronger than this. If you're starting a strong trend, you probably want the strongest bars at the very beginning. And instead, you have a bull bar with a big tail on the top, and there's a tail on the bottom as well. It's creating an open gap with yesterday's high, but we're probably going to end up closing that gap. So you can see bar two, an inside bar, it's a high one buy for the bulls. The bulls are hoping this is still a bull trend. But again, if you bought for any reason, do you like bar two? Are you excited about bar two as your high one buy? No, not really. It also overlaps with the gap from Friday. So you can see, the traders who sold and they scaled in higher, they were able to use the sell-off during bar two to buy back their shorts. I believe we went 5 points above the high. Should be a reasonable. Yes, we went more than 5 points above the high, which is a reasonable area to scale in. So the limit order bears who were selling for any reason ended up scaling in and they were able to make money. So that's not that great, I think, if you're a bull. So bar two, it's a possible bull trap. The bears are hoping that bar one is just a bull trap and the breakout is a bull trap, and that bar two inside bar, they're hoping it's a bear bar closing near its low and a credible sell for a high of the day. It is instead a poor little one short since it has such a large tail. Had it closed on the low, it would have been a credible high of the day. Obviously, it ended up being the high of the day anyways, but you can't really sell below bar two. It's really just better to wait and see if you can get more bear bars closing near their lows. Bar three, consecutive bear bars, 2, 3, but huge tail on 2 and huge tail on 3. So, excuse me. So maybe not quite as good as it could be for the bears. It seems that the bulls are interested in buying, but they're only interested in buying pullbacks and scalping out. You can see we went down on bar two and then up on bar two and then down on bar three. And now we rallied up on bar three. So it's possible on a lower time frame that 2 and 3 is a two-legged correction. So the bulls are hoping we have a big gap up, or not a big gap up, but they're hoping we have a gap up, a bull trend from the open with bar one, and 2 and 3 is a two-legged correction. And now we're going to get a big bull bar closing near its high, bar 4, start the channel phase. So they're hoping spike, pullback, and then some sort of channel phase. But ask yourself, are you excited? If you're a bull, are you excited about being long right now on the close of bar three? No, you're probably feeling more trapped more than anything. So if you bought the close one, you're not very happy with the placement of bar three at this point. I think the overall context favored the bears today because of the daily chart. I mentioned the IOI pattern on Friday, and I did in my review earlier, or my trading session earlier, I mentioned the IOI on the daily chart potentially being a problem for the bulls. So buying above Friday's high was a buy. It was a IOI buy signal bar on the daily chart. Usually, when you have a buy signal, the market needs to pull back and retest it. You don't usually get a strong move through yesterday's high, and that gap stays open when you have that sort of buy signal. So you usually have to pull back and test it, and you can see we obviously did on 2 and 3, but still it wasn't all that great for the bulls. 4, another bear bar, but a big tail on the top and a big tail on the bottom. So it's not really great to be long because you just had 3 straight bear bars. But how comfortable can you be being short after 2, 3, and 4? You haven't gotten a bear bar closing near its low yet. Obviously, it makes more sense to be a little bit more bearish here because it looks like we had, a leg down in a trading range. This looks like a leg up in a trading range and a failed breakout above yesterday's high. But you need a bear bar closing near its low to sell. What bears are probably hoping for is a pullback and then being able to sell some sort of double top bear flag for a swing. However, you can see, you never ended up getting it. A lot of times, if you're hoping for a pullback, that means the market's in a trend. But there's not really much to do here. Bar 5 might be bulls giving up. So after 3 straight bear bars, again, if you're a bull, you really didn't want to see 3 straight bear bars. You were okay with 1 or 2, but 3 straight bear bars, I think, is a big problem for the bears. For the bulls. So a lot of them will end up exiting at the market, and that's going to cause a lot of the selling that you see on bar 5 here. Just because the bulls exit, though, doesn't mean the bears are going to sell. So the bears want really good follow-through bar for bar 5, and bar 5 itself is still not all that good. You can see we have a big tail on the top and a tail on the bottom. So there's no reason to be long. We're always in short on the close of bar 5. So there's no reason to be long after 4 straight bear bars. The first reversal up is going to be minor. But it's hard for me to want to be short when I'm pretty positive we're going to pull back before we go much lower. So we might get a lower high from 2 through 5, but it's really just not that great to be short, and it's not that great to be long right now. So I think best case scenario is flat. If you traded within the first 5-6 bars today, you probably got to ask yourself, am I taking trades that are the best trades of the week that have potential to be really, really great trades? And I think the answer is probably not in that context. So to me, I don't think it was all that great to be selling for any reason, even though, always in short, and I understand the logic. It just wasn't ideal. 6, a high 1. So bulls, again, they're hoping that this is all still a pullback and they're getting a high 1 on bar 6 and they want to swing up. But what are the chances that you're going to buy above bar 6 and we're going to go up for 20 plus points? Probably pretty low. So for me, I would not want to buy above bar 6. I would rather wait for follow through. The bears also see the high 1, but they see that they just had 4 straight bear bars. And so to them, we're always in short, and this is a bear trend. And there's probably sellers above. This would be the bearish argument. And I think that that's a more credible argument than this being a high 1 pullback in a bull trend. So I think the bears have a slight advantage. There should be sellers above 6, but there might also be buyers not too far below 6. So you have to consider that as well. 7, an outside bar, but a doji bar. So you can see there were sellers above 6, and the traders who sold above 6 ended up scalping out below bar 6, and the bulls who bought below 6, you can see they're about to have a chance to scalp out around the bar 6 close during bar 8. That's exactly what happened. So bar 7, outside up, but a doji bar, so not really worth buying. If 7 could have closed on its high, it's a bull surprise. I think at least a little bit of a bull surprise, and it's going to get another leg up. But again, I didn't think the context was really all that great for the bulls, so I wasn't overly supportive of buying in this area. 8, a bear bar closing near its low. It's good for the bears. It's a bear surprise. So it's a bear surprise, and it creates an open gap with the bar 7 low and the bar 9 high, which is actually, we never filled this gap in. I think we might have to later this week. I wouldn't be surprised. If we, ideally, I think tomorrow we come back, we drift back down. Again, assume no gap. We drift back down a little bit tomorrow and we form a double bottom with 57 and want some bar in here and then start to get a swing up to at least this high, maybe fill in the trading range and then more trading range price action in this area. But regardless, 8, a big bear bar closing near its low. Is it sell the close? Yeah, you can probably sell the close. It's potentially the bulls are hoping that this is just a leg in the trading range and this is a second leg trap. And we get a big bull bar closing near its high on bar 8. Even if we get it, it's probably not worth buying. I'd probably rather wait. As I said, like I said, the context isn't all that good for the bulls. But the problem with selling below 8 is you have a really big bar with really big risk. So for me, I'm not really willing to sell unless you get really good follow through. And I think a lot of times after bar 8, you're going to get something relatively disappointing. If you do sell below 8, it's okay to just put a stop above 7 and take a chance that you're going to make, you know, 15 to 20 points before you lose basically your 10 to 12 points. And I think it's a reasonable thing to do. And if you get it, you get out basically when there's a second reversal against you. So it's probably okay to get out, above 15, I would imagine. But you can see a lot of the bears who sold below 8, they got a quick 5 points during bar 10 and they ended up scalping out. So they sold below bar 8, they saw 9, and during 10 they just scalped out, and that's part of what caused the bounce. But anyways, 9 triggering a surprise bar, surprise down below bar 7. Good for the bears. Again, bulls hoping second leg trap. Bears need some follow through here because sometimes 9 will be a big bull bar closing near tie, trapping the bears in. And instead, it's a relatively disappointing bar for both sides. A lot of bears, they're selling below 8, hoping we were going to get a collapse below like bar 13, knowing we probably wouldn't. And instead, you get bar 9. However, bulls do not. It's a high 2 on the open for the bulls, so we have gap up, and they're hoping high 1 6, high 2, bar 9. But obviously, the high 2 never triggered. But that's what they're hoping for. However, it's a bear bar. There's going to be sellers above, and we see if we keep the gap open. There are certain bears who they were too worried about bar 8 being a surprise, and so they waited to see if bar 9 was any sort of bear close. And when it was a bear close, some of them will just sell the close of 9, take a chance that they can make a quick scalp to the downside, which in this case they were. I assume they were able to make the 5 points as well. So the bears who sold below 8 are scalping with 5 points. The sell the close bears 9 are scalping with 5 points. So really not as good as it could be. And then you have bar 10, another bear bar, but a tail on the bottom, tail on the top. It's 4 straight bear closes, 7, 8, 9, 10, and we've had an overwhelming number of bear bars today. So of the first 10 bars, 8 are bear closes. You have to keep that in mind. Although, we really only have one good looking bear close on bar 8. It's still, the bears are still overwhelming the bulls. So there's no real reason to buy here. If anything, you're short or you're flat, right? You can sell the close of 10 and look for a second leg down. It's reasonable to do that. That 7, 8, 9, and 10 is probably going to get some sort of lower high, but it's reasonable to sell below here or sell any of these closes and expect the second leg down. 11, an inside bar, a bull bar closing not quite near its high. Again, you're not buying this. I think that, again, the bulls are hoping this is their high too, right? So same thing. They hoped it was here, but they didn't end up getting it. It went a little lower. Now they have a high 2. Obviously, the bears, they scalped out with 5 points. If you're a bear, do you exit above 11? Probably not. You know what you were signing up for. So, but it's kind of just a tricky situation because if this is a trading range, we can easily test back up into this area, and you can lose not only any profit you had, but take a slightly sizable loss. So you do have to sell small if you're going to sell below 8. So that's why I'm not a huge fan of buying above 11 or exiting above 11. I should have said buying back shorts. 12, a low 1 short. Good for the bears, but 1 pullback, 2 pullback could be the start of a third leg. So we might get a strong third leg down. But still, if you want to sell below bar 12, it's a doji bar and a possible third leg down. And again, the question you should try to ask yourself a lot during the day is this a high quality trade? Is this going to be one of the better trades that's available this week? Is that what I think that this trade is? And if the answer is no, then just leave it. Just leave it alone. And there's nothing wrong with sitting out of trades. It's okay, better to take 5 trades a week and have them all be great trades than to take 15 trades a week and eight or 9 are great trades, and 6 or 7 are just terrible. So it's better to just take 5 good ones than to take all of the good ones, but also some bad ones at the same time. The reality is, if you stick to taking just the best trades, you're going to miss a lot of trade, and that's fine. You have to learn to just be okay with that. And what you'll find is you're gonna have a lot of small loss days and a lot of small win days, and then you'll have a couple of big win days. Maybe I don't know. Once or maybe twice a week, you'll have a really big win day, and that'll balance out everything else. And then everything else will sort of just balance itself out is what I meant to say. But anyways, bar 12, a low one short for the bears. But for me, it's a third push down. I'm not really willing to sell down here. It's still pretty early in the day and the daily range should expand. So you're kind of wondering what we're going to get. But for me, it's not really worth selling anything. 13, a big bear bar, a big tail on the top or a big tail on the bottom. But some bears did sell to close. And obviously that's why we got 14. But to me, this is really climactic. I see 1, pullback 2, pullback 3. Sorry, I had to pause the video for a second there. But anyways, for me, it's not worth taking to sell on the close of 13. I would probably just rather wait. It's true that it's a big bear surprise and that we could go lower, but it's just not for me. So, I thought the only really, credible sell in this bear trend was below bar 8, stop above 7. That's fine if you want to do that. But for me, I just decided to sit out and I missed most of this opening range. 14 consecutive bear bars closing near their lows, 13, 14. So this is actually the first time we've had strong consecutive bear bars with reasonably good closes. I think we've been always in short since bar 4 or 5, and we've remained always in short. We may have remained always in short the entire day. We might have tried to flip to always in long in the rally, and we probably did briefly flip to always in long in the rally up to 39. I would say bears are going to exit above 34 and probably always in long 35, 36, but it's brief and probably back to always in short below bar 48. But I'll get to that. But anyways, I'm not really sure that this quite was able. It might have minorly flipped the market to always in long, but we were mostly always in short today. And you could argue that it was just a spike in a channel, but we ended up getting a higher high here. Possibly head and shoulders top, 1, left shoulder, head, right shoulder. That's a reasonable and 40% chance when you get a head and shoulders top. You get a measured move down somewhere down here. So we'll see tomorrow. But I think the important thing to recognize is that we're mostly just in breakout mode here. And obviously we had a wedge, 1, 2, 3. So 14 consecutive bear bars, really rather strong for the bears, but we're entering this area and this is probably going to be support. You can see we had a spike and then a pullback, and this is the start of the channel. So you have to imagine there's going to be some support in this area. 15, a bull bar, but a huge tail on the top. So yes, parabolic wedge bottom, possible low of the day, but why is there such a large tail on bar 15? That shows me a lack of urgency on the part of the bulls. 16, a doji bar basically. So it's a bad low one short for the bears. After 3 pushes down and the parabolic wedge open, that we're probably going to end up getting more buyers than sellers below bar 16, a low one short. And the bears are probably going to wait for a couple of legs sideways to up before looking to sell again. Just a sip of water real quick. So 16 buyers below, 17 outside up. It's good for the bulls, but we might just be starting a second leg up. I'm not really that convinced that we're going a whole lot higher. If we were going higher, why are there such large tails on 15, 16, and 17? This could be some sort of micro wedge on a lower time frame. You can see we have 3 reversal attempts down by the tails on bars 15, 16, and 17. But still, for me, you're getting into the area where you're starting to look to buy, but the bulls need to show you something. They can't just keep giving you these bars with humongous tails on the top and expect traders to be overly bullish with them. So the bulls need to do more. 18, another bull bar, but again, why is there a big tail on the top? So for the bears, it's breakout attempt above the micro wedge. For the bulls, it's breakout attempt above the micro wedge, and the bears just see a 2-legged correction. So bar 19 is a low 2 short for the bears, the low 1 below 15, and the low 2 below 19. And generally, when you get a wedge, parabolic wedge, you can expect a couple of legs sideways to up. So if you get a bearish parabolic wedge, you can expect a couple of legs sideways to up. But I don't know. Is this sufficient enough for you to decide that this was enough of a correction of this, and you want to sell below a bull bar after 4 other bull bars? So after 5 straight bull bars, you're going to sell a low 2 below a bull bar? Probably not. So the reality is there's probably more buyers than sellers below the low of bar 19. Bulls bought below and they scaled in lower, probably during 20, around a 50% pullback, or maybe around the bar 19 or bar 17 higher low. So that would be another reasonable area to buy. And we have a tail on the bottom of 20 and 21, a bull bar closing not quite near a high. You can see bar 19 close after 5 straight bull bars. Some bull algorithms are going to buy the close of 19 and they're going to scale in during 20, but they're going to use 21 to sell out of their longs. The bulls were hoping that 21 was going to be a breakout pullback and that they were going to get some sort of swing up. Remember, we have an open gap here in an open gap here. So this is a possible small pullback bear trend day until the bulls can prove themselves and close this gap. And if 21 closed on its high, a lot of bulls might have taken the buy as a possible breakout pullback bull bar closing near its high. Take a chance we've seen the low of the day, and you can buy and just basically look for the market to get back up into this somewhere into this area. Maybe the most recent sell climax high somewhere up here. But big tail on top of 21, bulls are selling. The remainder of bulls exit, and that's probably part of what's causing 22. You can see buyers below 21 during 22. Big tails, though, really just the middle of a tight trading range. I think the thing to remember here is you're looking for one of two things at this point. You're looking, well, first off, you know the bulls are going to get a chance, right? So to me, this is now, as the start of a possible trading range. If it is a trading range, then these gaps might end up closing. And if these gaps are going to close, you know the bulls are going to get a couple of chances. And so if the bulls are going to get a couple of chances to reverse the market, you have to be looking for some sort of bull setup for maybe 21, and maybe if 23 had closed on its high, but it doesn't. And then if the bulls have their two, three, whatever chances, and they can't make anything happen, then you have to start to think, well, we're consistently failing at the moving average. We're not able to get below it. We have a pretty strong parabolic wedge here. It's a parabolic wedge, but on a, let's look at a 15-minute chart. This is the thing to understand about parabolic wedges and why reversals against a parabolic wedge are usually minor. That on a 15-minute chart, it's a breakout to the downside. So yes, for the bears. Sorry, what was I going to say? Lost my train of thought. So yes, it is a wedge, but still this is going to get at least a couple legs sideways to down. You can see on here, it went 1, pull back, 2, pull back, 3. So 3 legs down. This is really just a wedge on a 15-minute chart today. So 1, pull back, 2, pull back, 3, and then a reversal up, and we bounced. So I believe I was on 22. You can see the bulls exited, probably buyers below 22, and 23 is another leg up. But the bulls who were buying for any reason, whatever, it closed at 19, you can see they keep selling in this area. So anytime we get back to the upper part around the close of bar 19, bulls are using these rallies to sell out of their longs rather than to add to them. So for me, I think that's pretty disappointing, and I wanted the bulls to do more, but it doesn't seem like they're gonna. Bulls is disappointed to close at 23, might start exiting. You can see 24, a bear bar, but not closing near its low. The Bears are hoping this is a 3-push pullback. 15 to 19, pullback 20, 21, pullback 20 to 23. And now we're going to continue down and get some sort of measured move down. And the bulls are hoping that we're going to get some sort of higher low major trend reversal, or a lower low major trend reversal is fine with them, but they're just trying to avoid really strong, big, strong bear bars closing near their lows. So 25, another bear bar, but a big tail on the bottom. You can see we're pulling back, but the bulls want a double bottom 25, 15. And you can see the bears who sold those 14 scaled in higher, disappointed with how the sell-off went, might be buying back shorts around the bar 14 low during that. You can see probably around a 50% pullback is where traders started to exit, or when those traders started to scale in. 20, 26, an inside bar, it's a micro double bottom, 25, 26, and a bigger double bottom, 15, 25. But, 3 straight bear closes, you don't want to buy above the bear bar. Had 27 closed on its high, that would be a bull surprise, trapping the bears in, and you could take that buy for a swing up. Would be towards the top of a trading range of the moving average, but would have made a lot more sense. But instead, it sells off. But how much do you want to sell below 27? A bull bar? Probably not very much. It's true we keep failing at the moving average and we might go lower, but still, I don't think selling below 27 is going to work out for you all that often. So better to wait. A reversal up 28, possibly a lower low major trend reversal for the bulls. We do keep getting these lower lows, so it's possible we get one more leg down. I was surprised we went below the 28 low. I knew that we were probably, if you bought above 28, I knew we would probably go a little bit more sideways here. Well, I did buy above 28. I thought it was fine. The only things I did today was I bought above 28 and 57. I probably should have sold below 48, but I was just a little distracted at that point in the day. So 28, I thought possible lower low major trend reversal. It should be at least a couple of legs sideways to up. And to me, this looked like more of a trading range. So I thought we would get into the gap of the bar 10 low and the bar 19 high, which we did end up doing, but we obviously traded below the bar 27 low first. But I thought that if we were going to get the bounce, that the 28 low would probably hold. Obviously, it did not today. So 28, a big reversal up, a bull bar closing near high. It is a bit more of a doji bar. So again, it might be a little bit more of a trading range. We might go a little more sideways first, but reasonable to be long. And then 29, big bear bar, but a tail on the top, tail on the bottom. Do you really want to sell this? Could be a third leg down. So for me, I'll wait to see if 30 can close below bar 28 and we can get the breakout. Instead, we do not. We get something disappointing on 30. A reversal up, 31, a bull bar closing near its high. So good for the bulls. If we break out below 31 and get a strong bear bar closing below 31, that will have been two credible buy entries, 28 and 31, that would have both failed. And it would have been, you can see we have two open gaps. And if you break out below two credible stop entries for the bulls, it'll usually lead to a measured move down. So that combined with the open gaps means that if we can get a bear bar closing on its low below bar 31 at this point in the day, this might end up becoming a big bear trend day. Instead, 31, a reversal up. We'll see if the low holds. Disappointment initially on 32, but relatively expected. Another leg down from the bears from 29 and 30. And then 33, we started a rally, but you can see a lot of the bull. This is just a tight trading range so far, 30 through 33. So the question becomes, which direction are we going to go? And then you get 34, a bull bar closing near its high. So for me, this is a give up bar for the bears. They're stepping aside, admitting this is a trading range, and they're probably just going to exit. And because it is a trading range, you can take the buy above 34, trying to make 10 points, risking a little over 8. And I would say you have a 60% chance buying above 34, getting back to this low before we get to this low. So I thought reasonable to buy above 34, a bull bar closing near its high, and the bears will probably give up above it. And they do, and that's what causes 35. Consecutive bull bars 34, 35, but tails on the tops of 34 and 35. So the strong, as good as it is for the bulls that we got to bounce, the reality is this might just be a vacuum test of that gap in the top of the bear channel, the 19 high. 36, 4 straight bull bars, 2 of them reasonably big and strong. You can see we have tails on the top and bottom of 36. So I don't know how much higher we're really going here. Probably buyers not too far below if we do get a reversal down. But to me, the first reversal down will probably be minor. But again, probably just more trading range price action. But I do think we're going to get to the bar 10 low. You can see during bar 37, we did end up rallying to the bar 10 low, and the bears who were buying or the bulls who were buying for any reason sold out of their long, basically because this was the target. So 37, maybe for the bears, a higher high double top with 19, but you don't want to sell below a bull bar after this many bull bars to the upside. 38, an inside bar, a high 1 for the bulls, but I don't think most traders would like to buy above 38 this high in the range. To me, it looks like you're buying a high 1 too high in the range, so I'm probably not going to do anything. 39, consecutive bull bars closing near their highs, 38, especially 39. But what do you notice? A couple of bigger bull bars, and now the momentum is shrinking. So to me, we're starting to slow down here. This might become more of, well, it is the channel phase. 36, 37 is this, or sorry, 35, 36, sorry, 34, 35 in my mind is the spike. And then we pull back on the tail of 36, and now we're in the channel phase. And to me, we're probably going to convert into a trading range pretty soon off of this spike in channel. Doji bar on 40, so a possible wedge, 35, 37, and 40, but I don't really want to sell below a doji bar after this many straight bull bars. And this is also a micro channel, so really not worth doing. You can see buyers below 40 during 41. It's an outside down bar on 41, but to me, just looks like a trading range. We might have to test back to the bar 36 low. You can see we found support around the bar 36 low a little bit later because that is possibly the bottom of the channel. And then we got a breakout below the channel, this channel, and measured move down at least. We have the measured move down during the breakout bar. So 40, 42, an IOI pattern, which is similar to, just take a look at this. An IOI pattern, breakout attempt above that fails, and then a breakout below. The daily chart, it's an IOI pattern, a breakout attempt above that fails, and then a reversal back down. So similar pattern there, final flag for the bulls here that we're talking about with the daily chart. 43, bull bar closing near its high, Consecutive bull bar is 42, 43. It does close above the 41 high, but I think we're a little bit overdone here. If you're buying up here, I just wouldn't. I think that the magnet has been reached and you're buying towards the top of what's probably a leg in a trading range. 44, an outside down bar, but a big tail on the bottom. If you sell the close of 44, I would not. I think it's going to lead to a couple of legs sideways down, but it might end up being a minor reversal. Does it make the market always in short again? It gets always in short in the conversation. I think 48 makes the market always in short again. So 45, bull bar, but a tail on the top, a tail on the bottom. Not worth buying. I think we need to go sideways for longer. Buyers below 45 during 46. It could be a two-legged pullback, 44, 46, and we get some sort of bounce here, but I'm not sure how much higher it's going. See, we have an inside bar on 47. Bulls high one, but you tell me if you want to buy above the bar with a big tail on the top and the bottom, and probably the middle of the upper range. It's really just not that good. 48, a bear bar closing near its low. It probably flips the market back to always in short. The bulls would argue it's a three push pullback. 44, 46, and 48. I say three push pullback sometimes because I don't know. I don't know why. Again, it's the same forces as a wedge, but to me, I see one pullback, two pullback, three, but I can't draw a clean wedge. For here, I can see the wedge. It's 1, 2, 3. So in my mind, if I see it within the bars like this, where it's not really three clear lows, I just think call it a three push pullback. You can call it whatever you'd like. It's the same force. You're talking about the same forces. So if you want to call this a three push pullback, and you want to call this three pushes instead of a wedge, you can do whatever you'd like. Just as long as you know that it's the same forces that are acting or taking action here. So 48, a bear bar closing near its low. The bears would sell looking for a second leg down from the parabolic wedge. You remember I showed the parabolic wedge on a higher time frame. And so this rep from bar 15 to 47 is definitely enough to correct this. So to me, it's possible we should try to get some sort of second leg down here. Disappointment 49. So we're alternating bull, bear, bull, bear, bull, bear, right? Bull bar 43, then bear bar 44, bull, bear, bull, bear, bull, bear. If you notice, we did that the whole way down, which is what made this more likely a climactic parabolic wedge on a lower time frame. Push one, pull back, push two, pull back, push three, and then we're starting to pull back. So the same force is being applied on bars 48 through 52, similar to the forces being applied to this whole thing. Obviously, this is a larger pattern, and this is a bit more minor, but it's still the same forces at work. It's just the smaller pattern has less influence than the larger patterns obviously do. So 49, disappointing follow through, but then a huge bear surprise on 50. I wanted to sell 50, but it ended up getting really, really large towards the end of the bar trading range behavior. Bulls see a sell climax. They're hoping for some sort of double bottom to happen with the 33 low and the bar 50 low. What do the bears see? The bears see a breakout and they want the start of the second leg down. But then you get 51. The bulls were hoping 51 would close on its high and be a possible major trend reversal, a higher low major trend reversal, and they'd start to get a swing up to at least the bar 50 high, which is the sell climax high. But I'm not sure that's going to happen. Low one short for the bears on 51, but do you want to sell below this bull bar? Probably not. So it's difficult. And then 52, another bear bar, but again, alternating bear, bull, bear, bull, bear, bull. So not really worth it. 53, an inside bar closing near its high. So, sorry. 53, an inside bar closing near its high. Or sorry, not quite closing near its high. It's an inside bar. It's a doji bar, really. So again, you want to buy here? It's really tough to want to take the buy in this area. 54, outside up. We're probably going to get back to the 51 low. So the bulls who bought below that low are going to be able to make money. Thought the interesting target for the bulls, I thought this was out of reach unless we started some sort of crazy buy the close rally. But I thought it was reasonable to think the bulls were going to close the gap between the 49 low and the 51 high. Because the bulls some bulls thought that 48 was disappointing, 49 was disappointing with 48. So they'll buy in this area and add below 49. They got trapped. And to me, this looks more like a trading range than a bear trend. So we might have to get back to this area. Outside up 54, but consecutive doji bars. It's not worth buying anything yet. Wait for another reversal up. 55 was on its high at one point, but you can see the bulls who bought the breakout below bar 50 just ended up selling out of their longs. So they bought below 50, they added on lower, and they ended up exiting their longs. 56, another bear bar, but you can see traders bought back their shorts at the low of the day. And then 57, a bull bar closing near high. It's a wedge, 14, 31, and 56. So it's a wedge, 57, a bull bar closing reasonably near its high. It's a little disappointing that it didn't close on its high, but I think it's still, the pattern is strong with the large wedge here. And I think the bulls are probably going to get back to the bar 48.9 low. So the question is, are they going to get trapped on 58? And if they don't get trapped on 58, you might get a similar situation over here where Bears waited for one more bar to make sure they didn't get trapped, and then they sell the close. The bulls might wait for one more bar, and they don't get trapped 58. Now it's consecutive bull bars. Might be flipping to always and long pretty soon here. And we're probably getting back to that magnet, because if this is not a bear trend, then it's probably a trading range. The trading range, the 49 low, is a magnet. 59, another bull bar, but a tail on the top near the moving average. Some traders like the moving average with a scalp. I'm not sure. I don't think it was wrong to. I don't think you got 2 to 1 of your true risk, though. If you did, yeah, so that wasn't achieved quite until up here. It's also interesting that if you bought above 57, in order to make a 10-point scalp, the market has to go 10.5 points. And look, that's exactly the low of bar 49. So the bulls who bought above 57, is it the exact low? Let me see. 37.5. Yeah, so it's the exact low. So the bulls who bought above 57 could make exactly 10 points trying to get to the 49 low. It's not a coincidence. It's the market creating reasonable traders equations. 60, a bull bar, but a tail on the top and a tail on the bottom. I'm probably going to the bar 49 low, but I'm not really that interested in making this a huge buy the close rally. So I think if you bought, you should take at least half off at the 49 low, or you can just scalp the whole thing if you want. You'd like. It isn't moving in such a way that I think we're going to get, a huge rally to the bar 7 low. Had 59 closed on its high and 60 and 61 looked like 59, then that'd be a different story. But 61 is a doji bar. So when you see 62 rally up to the 49 low and start to sell off, probably part of you should be thinking, we're starting to come to this is starting to come to an end. We've reached the magnet, because the next magnet's pretty far above. I think obviously, this closes a magnet and stuff, but I thought this was a pretty important magnet. Gaps are pretty important in trading ranges. So 62, big tail, really just sellers in this area. 63, more follow through, but towards the sell climax high. Outside down 64, but not really worth selling. 66 is just the second leg up from 60 to rally to 63. And for me, once I see 67, 67 is a micro double top with 64, 67, and a buy climax as the second leg of the double top at 66. 30% of the times when you get a double top, the second leg up will be a buy climax. So that might be what 66 is, but I'm all done trading. I don't think the reward potential is all that good. We might close this gap between the bar 60 low and the bar 55 high. So did we get there? We did not quite get there on 78. That's probably what it was going for. But downside is relatively limited because of the move up from 57 to 63. And it's just not worth doing anything. We start to go sideways towards the end of the day. I would just be done. For stop orders today, 8 is okay. 28 is okay, I think. 31, 34, 48, and 57. It was kind of hard to take, any consecutive trades because by the close, 35 maybe, but not great. By the close 59, maybe not great. Sell the close 10, probably a little better, but still not great. So this was, probably not the easiest day. It was kind of weird because it was a bit of a trend day, but it was not the easiest day for stop order trading. The daily chart, you can see we had an IOI pattern and we're getting a reversal down. So the bears, pay attention to the low tomorrow. Either the bears are going to the bulls will give up here and we start to get a breakup below the neckline, the 822 low, and start to get back into this area and start to go sideways, or it'll fail and the bears will not end up selling more below, and potentially we start to try to rally towards the high. So, be aware of reversals or a strong breakout below yesterday's low tomorrow if we were able to get there. If we rally back up into this area around the 823 high tomorrow, beware of the bulls who bought above here, disappointed at this, looking to sell out of their longs. The weekly chart, 3 straight bear bars, and then a giant gap down, and then 3 straight bull bars. So maybe 3 bear bars, 3 bull bars. Maybe we get a bear bar here. This is really strong. Still think this is just a trading range though now. And then the monthly chart is coming to a close pretty soon. So the question for the bears is, can they get to 55.77.75, which is the open of the month? They would like a bear close, obviously. It's not going to be a strong bear close if they get it, but if they can get any sort of bear close, it'll increase the chances that this is just a leg in a trading, or this is just a trading range and no longer a bull trend, which might be the case. So yeah, I believe that that is it for the day.